we go. Welcome. Can you guys hear me? Cool. So I'm Chris Hermida from Circle. I'm a trader over there, and I'm giving a somewhat brief talk about stablecoins. So my legal team has actually asked that I say this really quick before I begin, which is that nothing that I say here should be construed as investment advice, a recommendation for one particular crypto or stablecoin over another. Circle trades and supports multiple stablecoins, and crypto is a new technology, and there's still a lot of things that could go wrong. Do your own research. Thank you. Strong disclaimer. So I assume most people here are already somewhat familiar with Circle, somewhat familiar with Circle or with stablecoins. But just in general, we are one of the earliest crypto finance companies in the States, most notably known for Circle Pay originally, but also our recent acquisition of Poloniex, our OTC desk, and then also USDC and being a founding member of the Center Consortium. So just a brief overview of Center and what we're doing there. So Center serves as a consortium for our USDC stablecoin. And what does that mean? Well, Center is a consortium where multiple members can join and jointly issue USDC. And we're trying to build an open governance model where we can have different partners and different people that can participate in sort of this ecosystem and set the standard for an open stablecoin. So what are we going to talk today? So the talk was originally stablecoin trends, and sort of going through it, I kind of realized, I think the bigger thing to talk about, especially what we're seeing here, there's lots of other folks that are giving great talks about, say, MakerDAO, DAI, and some of the other ones. So I'd just like to focus on sort of more of the why, as to why stablecoins are where they are, why they become so big, and sort of why the interest right now. Brief overview, again, I assume most people here are somewhat familiar with it. Stablecoins, stable, right? They can serve somewhat as a store of value, or at least are less volatile than, say, crypto. They're fungible. You can use them anywhere, or at least anywhere in the crypto ecosystem. Send them to and from exchanges, pay your friends with it, et cetera. And then accountable. And by accountable, I don't necessarily mean collateralized in a specific format, as much as just you trust that the peg or the mechanism there will hold under certain circumstances. And there's a variety of different ways of accomplishing that. So in general, right, you guys have probably seen this a million times. Most stablecoins nowadays can sort of be broken down to fiat collateralized or crypto collateralized. There are other ones, there's sort of these multi-collateral models that are coming on. There's the hybrid models, there's the algorithmic models. But just for the sake of simplicity, right now the majority of the market cap of stablecoins, or at least by issuance, are in either fiat collateralized, i.e. one-to-one fiat collateralized, like USDC, like Tether, like Paxos, et cetera, or crypto collateralized, like MakerDAO, most notably, Haven, BitShares, et cetera. There's just sort of a brief overview of, an example of sort of the accountability, right? A variety of different stablecoins now, at least on the fiat side, are issuing attestations or some other way of verifying and proving reserves. You are relying on that trusted third party to do it, but again, sort of the key assumption there is that you do trust in that framework and in that model for that particular stablecoin. And on the crypto collateralized side, DAI, the same thing, right? You can open up on the blockchain and see, how much ETH is locked in a CDP. So why do we need stablecoins? So stablecoins are one of the big themes of 2019. We've seen a number of different companies issued, or at least explore issuing their own stablecoins and explore it. We've seen larger corporates like JP Morgan, like Facebook, rumors of them exploring the stablecoin space. Central banks talking about issuing central bank issued digital currency, to stablecoins backed by stablecoins. Why now though? Crypto's approaching 5 years old, crypto's approaching nearly a decade, and stablecoins are nearly 5 years old. If you look at older concepts, even more. Well, the benefits of incorporating stablecoins in the ecosystem have been made pretty clear, and they've been reinforced over the past 2 years. They're solving real problems. At a high level, there's growing demand for stability. Most people, well, let me ask this to the audience. How many people here are okay holding a 65 vol asset? Okay, was hoping there'd be more. This is crypto enthusiast. How many people here are okay holding, an extremely volatile asset and using it as a payment mechanism? I am too, I'm with you guys. But most people are not like that. I'd argue, most people outside of this room are not okay with extensive volatility. You don't want your cup of coffee to cost $2 one day and $4 the next. So there's sort of that key driver. Number two, though, convenience. As crypto grows and people want to move money from one place to another, stablecoins can be or serve as that payment rail. You can send USDC or USDT from one exchange to another a lot faster than you can wire a bank and then wire from that bank to the other exchange. So purely from a payment rail and convenience perspective, it's solving a real useful problem. And then lastly, more just from the point of financial inclusion, anybody with a smartphone can have an ERC20 wallet. And the barriers to entry there, the barriers to entry to use and receive payments, whether it be via stablecoin, whether it be via cryptocurrency, are lowered dramatically versus a USD bank account. And I think, that's one of the dominant themes and trends of crypto. So just to illustrate, there's a chart of Bitcoin volatility. And even in the past, right, it's still fluctuated anywhere between, call it 30 to 150% in terms of realized vol. So volatility isn't the only driver, though. If you look back at sort of this earlier slide, you can see, volatility, Bitcoin has been volatile, and crypto in general has been volatile pretty much since the very beginning. But why did stablecoins just relatively recently take off in terms of issuance, right? We've had stablecoins arguably since 2015, in some cases earlier. We've had Tether has been around for a while, BitShares has been around for a while, Steam dollars have been around for a while. Why just now? Well, in mid-2017, a few things sort of came together to really cause a dramatic uptick in stablecoins. A was the rise of crypto-to-crypto trading. Most of the people here probably, I'd like to hope, have Poloniex accounts. Hopefully they also have Binance accounts. Hopefully they also have a variety of other exchange accounts. That sort of rush and that huge urge to sort of trade in these other alts and other cryptocurrencies created a big need to have stablecoins on there, especially when a lot of those exchanges could not get fiat banking. B, China banning CMY crypto platforms. When China banned access to crypto, or not directly, but in the sense of the fiat-operated platforms, a lot of those traders and a lot of those folks needed some way to access crypto. And in some senses, USDT markets and other markets replaced CNY-denominated markets. A lot of that flow went over there. And then lastly was more market dynamics. USDT pairs traded at a discount to spot pairs and encouraged people to buy Tether where possible at a discount to then buy cryptocurrency and arbitrage that spread. So all of those options made stablecoins a much more appealing option for speculation, particularly given the trouble in attaining USD banking. Many traders saw stablecoins not just as a more viable trading pair, but also as a better settlement mechanism. Would you rather wait 3 to 5 business days for an international wire, going through several correspondent banks, or send someone a stablecoin immediately to settle a trade? Consider the scenario of moving USD between exchanges. For many exchanges, you previously had to wire money to your own bank account, wait for it to be credited, and then subsequently wire those funds to the other exchange and hope they credit it by end of day. Given the banking situation for many crypto exchanges in the mid-2017, it would take several days between layers of correspondent banks to have deposits credited. In many cases, stablecoins were credited immediately as soon as they were confirmed. And with that, a lot of traders shifted over to trying to use stablecoins as sort of that settlement, redemption, and payment mechanism between crypto exchanges for speculation. But also, as stablecoins have grown and become more liquid, we've seen more of our flow shift towards stablecoins. Part of this has been more counterparties want to settle in stablecoins. They're okay settling out trades in USDC, they're okay settling out trades in USDT, they're okay settling out trades in other stablecoins, rather than just fiat because they know they can receive their money immediately. But another big part of it can just be attributed to stablecoins becoming more liquid. With stablecoin pairs for large cryptos fairly liquid, we've noticed a general trend of counterparties selling crypto on exchanges for stablecoins, and then simply using OTC desks to redeem stablecoin flow. And in that sense, stablecoins have helped make the crypto market more competitive in many ways. It's one of the closest examples to perfect competition we'll probably ever see. Anybody in the world can start trading crypto, OTC, or on other exchanges, provided they pass AML and KYC, given the stablecoin dynamic now. You're no longer reliant on having access to USD banking, or having access to Euro banking, or having to have gone to a certain particular place or institution to be able to access the crypto trading market. No bank account, no problem. But also in the DeFi ecosystem, you've seen a lot of stablecoins. You've seen stablecoins shifting and being used in DeFi as well. It's not just centralized trading. It's not just, I would call it distributed trading, but it's not just the sort of distributed activity that you're seeing. You're also seeing folks use stablecoins to participate and trade on DEXs as collateral for decentralized lending platforms such as Dharma. And in some cases, even in games. So what's next for stablecoins? As you'll see in later talks, there's a moving trend to multi-collateralized stablecoins. Why? Well, the addition of multiple forms of collateral means, in theory, these stablecoins are a lot less risky than being solely backed on one volatile asset. In particular, in the case of crypto-collateralized stablecoins, being backed by any sort of real-world asset or any sort of combination of a real-world asset means they can now be isolated from this so-called gamma risk of being long cryptocurrency or margin long cryptocurrency with collateral on cryptocurrency and being extremely exposed to price fluctuations. Another dynamic of that, though, is if they're now collateralized by, say, security tokens or any sort of other income-producing asset, will you see stablecoins start paying interest? Will you see stablecoins try to return some sort of gain to the holders of the stablecoin? It's an open question, but with DAI moving to multi-collateralization and some of the others sort of offering these interest rates via, in the case of DAI, the DAI savings account, you'll see more and more projects likely talk about it and certainly explore the option pending legal and regulatory concerns. And lastly, there's been a lot of talk about sort of algorithmic and senior shares-based stablecoins. What do we mean by that in sort of this hybrid model? Well, by that, we mean stablecoins that use some sort of algorithm or some sort of other mechanism to maintain that peg rather than being directly collateralized or solely collateralized, better said, by, say, a fiat asset or by a crypto asset. There's Terra, there was formerly Basis, but there are a number of other platforms working on these sort of approaches. And the last thing I wanted to chat about and sort of what we're likely to see next with stablecoins is multi-chain interoperability. Just this week, you saw Tether announce an implementation on Tron. Now, regardless of folks' feelings on particular projects or other particular blockchains, interoperability is likely going to be a focus in 2019. You're going to see a lot more projects attempt or in some way incorporate different implementations across different chains. That can be done with not just wrapped stablecoins, but also duplicate implementations across different blockchains. And ultimately, at the end of the day, those multiple implementations give users choice, reduce central points of failure, and help create a stronger, decentralized ecosystem. Anyways, that's about it for this short talk about stablecoins and part of some of the reasons why I think that they've sort of exploded over the past few months. Happy to open it up to questions, whether it be about stablecoins in general, whether that be about USDC, and folks' thoughts on that.
So you talked about the Facebook coin a bit, but what do you make of the fact that it will reinforce Facebook as a big machine that it would just be the biggest bank in the world if they were to build their stablecoin.
Well, in some cases, right, you still need to get user adoption. You know, it's not clear that even if they do build it, right, that the users will come. And I think you've seen a lot of examples of big companies try certain very ambitious projects and
the same way WeChat works in China. They are now almost the biggest bank in China.
I mean, it's certainly possible, but again, you know, I think there are counterexamples, right? Google with Google Plus, arguably the best position in the market to sort of capitalize on that, and it sort of went nowhere. I'm not saying that that's going to be the case with Facebook, but it's still an uphill battle, right, to gain users, and particularly if it's in a closed-loop network, right? I think you see the advantages of open systems just being here.
Of course, but don't you think it would be a threat as well that they would just have everybody use their coin, and this would just make them bigger than they already are?
I mean, it's certainly possible, but look, it's good for the ecosystem. I mean, more choice, especially more legitimate offerings from large companies, I think are good. It gives consumers choice. And if you like that option, if you want to use that centralized closed loop coin, all the power to you. But at the end of the day as well, if you want to use an open decentralized network, you have the choice to do that as well. I think we had a question over here from the front.
Where are you? Question? Awesome.
We have seen basically throughout 2018 a few crypto collateralized stablecoins go through a baptism of fire, where the underlying asset lost huge part of its value, and yet the stablecoins held up. But I'm wondering if there are some known examples of failures, and what in general are the failure modes of stablecoins?
Yeah, I mean, I think that's part of it. That's definitely been the case where there have been some that have lost their peg, and I don't want to comment on particular projects, but I'll come see you after this talk to get off chain. But yeah, no, I mean, it's pretty remarkable when you think of it that projects such as, you know, say MakerDAO have maintained their peg or maintained relative stability despite, you know, what, a 95% drawdown from peak to trough in the ETH price.
Thank you for the talk. How do you envision the appearance of new tokens, so stable coins that are quite regulated but quite open? So like, for example, the appearance of JP Morgan coin, which is it's nowadays oriented to investment part, but it could be that there's a position that it's open on a network, on a mainnet or on a permissioned network. How do you envision the usage of real fiat tokenized money on the mainnet? Because that's a game changer in the way that anyone who has euros can work in the mainnet using a coin which is in euros and moving it around, for example.
Yeah, I mean, so going back to sort of I think it's going to have a similar, or it's going to suffer from the same things that sort of the Facebook coin might have, right? Depending on whether it's a closed versus open loop system. What I'll say is, again, you know, it's good for consumers. You'll see more choice. In terms of usage like that, it's unclear exactly what it's going to look like. My understanding, and I don't want to comment too much on it, is the JP Morgan coin is sort of limited to institutions and limited to sort of high net worth clients and individuals. Whereas, you know, some other coins are focused more on, say, a peer-to-peer payments market.
So why did you, for example, you say about closed loop and open loop, no? So if we face regulation, it's quite a closed loop, no? Because you need to pass different KYC animals to have a closed loop, no?
Well, by closed loop, I mean that it's on a private chain and sort of solely lives in this ecosystem. And again, you know, details are still forthcoming on some of these different implementations and projects. That being said, you know, even if it is on a public chain, you know, whether it's USDC, whether it's Paxos, it really doesn't matter. Sort of if it's a fiat-backed, or better said, USD-backed stablecoin, they do need to abide whether it be directly or via their banking partners that's storing the actual USD by AML KYC.
Thank you very much for this, I think, great overview of the stablecoin situation. My question is about USDC and its future. Do you see it as always remaining as fiat-backed stablecoin and kind of relying on that banking relationship? And what are the, and kind of part two to the question, what do you think are the biggest barriers to growing its market share in the stablecoin market?
Yeah, so in terms of what will happen in the future, I'm not quite clear. I think right now the current model is, to maintain that sort of fiat one-to-one peg and be backed by traditional fiat assets. In some cases, the reserves will be invested in, say, money market funds and, a limited amount of sort of low-risk instruments. But in general, I don't see that main approach changing much. And in terms of growing market share, it's fairly liquid as is, listed on a number of different exchanges, including Binance, Coinbase, Poloniex, et cetera. We'll probably continue going down that route. We'll continue exploring partnerships. We'll continue exploring different ways of sort of expanding the USDC ecosystem. And, if anybody here is interested in that, be happy to put them in touch with sort of our BD side on USDC.
Thank you.
Thank you for the stablecoin overview. And you just said that the dollar on the bank account are invested into assets, money market funds. Does it mean that the fiat collateral can, if there is a big financial crisis, lose some value, and then the peg can be lost in a way?
So I should say it can be invested in money market funds. That's sort of part of the draft of it. Right this second, to my knowledge, I'm not sure the specific breakdown, but my understanding is the vast majority of it is in safe bank accounts that are extremely conservative and low risk. Now, yes, if the entire financial system collapses, then there will be issues, but there'll probably be bigger issues than just USDC if that happens.
Thank you.
Thank you. I have a question regarding USD. Is it only used for P2P transaction, or is it used also in the network of merchants, retailers? What are the plans for it?
Yeah, so there are definitely plans to expand it and sort of grow the ecosystem adoption. I'd say right now, the main use case is where we see the most value, and most recently, at least, where we've seen the most adoption has been with the trading and speculation side, particularly with settlement, redeeming trades, and sending USDC across exchanges as sort of a payment rail. It's possible that in the future we'll see a lot more, say, peer-to-peer payment usage, and there's a lot of different approaches that we can take. But again, right now, in terms of where we're seeing sort of a substantial amount of activity, it's still primarily the speculative activity.
Okay, thank you.
Okay. For my accountant, USDC or USDT isn't a stablecoin because it's pegged to dollar. Do you know if there is some project for a stablecoin based on the euro?
Yeah, so there are a few Euro stablecoin projects. Tether actually does have a Euro implementation. Stasis, I believe, is working on a Euro stablecoin. The Center Consortium does eventually want to extend that to other currencies, but right now, we're focusing on the USD-based stablecoin, and we'll go from there and revisit expanding it to other currencies soon.
We're good on time. Any other questions?
Hello?